warrant and no QE3, but we saw a boost in the markets. What did you think of Jackson Hole?
Well, I think despite the hype in the lead up to Jackson Hole, I don't think the market was actually expecting QE3. The Fed actually has undertaken a policy directive in the last few weeks, that is the commitment to keep interest rates at zero for the next few years. Bernanke reinforced that, and of course the commitment to a two-day meeting and a fuller discussion of the policy options, of course, just reinforces to markets that the Fed still has some room for manoeuvre. The speech really emphasised, though, that there are other policy tools that need to be looked at here, and most importantly, fiscal policy tools for the longer-term projections for the US economy. And, of course, he also emphasised that he's quite optimistic that the US economy actually is going to get through this very difficult period. So that was all optimistic and I think most appropriate.
Oh, right. Well, you know, he also pointed the finger at the U.S. government, saying most of the tools to, protect the economy and the recovery lies in the government's hands. But what about this market reaction? I mean, you saw markets, the Nasdaq boosting up 2.5% or so, the Dow and the S&P up 1.5%. What were they reacting to? The fact that the September policy meeting was extended to 2 days, and we might see QE3 then?
Yeah, I think there is that hope. I think the markets were pretty thin on Friday given the weather events occurring in the US as well. But I think more importantly here is that the real problem right here, right now for global financial markets is actually European. And there was some strong statements from the IMF head Lagarde, and I think markets are seeing policymakers aware of the problems and committed to trying to sort of look at the problems and get some solutions happening. So I think the market's just realising that this isn't so much a problem that's going to be solved by the Fed. And if anything, Bernanke reinforced that he expects the US economy not to do too badly over the next few years.
What's not too badly? I mean, you're looking at Q2 second quarter GDP growth in the U.S. revised downwards, mind you, to just 1%, coming off that anemic 0.4% growth in the first quarter. So why does he sound so optimistic?
Well, I think the point here, I mean, the GDP figures actually, although there was a downward revision, there was some optimistic components there in the sense that there was less inventory accumulation, more final demand. I know it's all at the margin, but that's a little bit better news on what's going on in the US. And of course, I think the key here is that the US economy has gone through a huge amount of adjustment in the last few years to the financial problems it faced a few years ago, and the economy is actually in a good position to start growing again. It lacks the spark, and he highlighted that the housing market is the key here. They need to get that US housing market going because housing has been the major driver of just about every recovery in the US over the last 50 years. Of course, housing was at the centre of the problems related to the failure of Lehman Brothers and the GFC a few years ago, but I think he showed that the housing market is at the centre and is also likely to be part of that recovery story for the next few years.